Hi everybody. Hello Kelly. People will pop in over the hour or they won't.
Yeah,
Or we'll see how we go. So today is um the second part of a of from last week. So it's the same topic, part one and part two. But nobody came last week because it was NAIDOC week and I figure everybody was really busy. So probably didn't need to do it. I probably should have just said no session that week. But anyway, I did it anyway. It's been recorded and I'm going to go over a little bit of what we talked about last week anyway. So it'll be it should be yeah. If you missed it, you can watch the recording. And if you missed it, I'm just going to go over a little bit of it. Yeah, anyway. So, hello. How are you? What did you have
good.
for lunch?
I had crumpets with honey.
Oh, yum. See,
Yeah.
someone in my house says it should be crumpets with syrup, but I'm like, no, 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 no,
No, it's definitely got to be honey.
no, 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 no. It's got to be honey. And then someone says crumpets and Vegemite, and I'm like, oh no,
Oh, somebody said that to me today, and I'm like, no, go away.
no, no. Toast
Apparently,
and
there's
Vegemite.
now, yeah, toast with Vegemite. Apparently, there's now banana bread crumpets available.
Oh, that's
So,
intriguing.
gonna have a look for them next time I shop,
Yeah.
just for something a bit
Banana
different.
bread. But then, see, banana bread, I you can have plain or it's really nice with butter as well.
Yes.
Like a warm banana bread with butter on top. Yeah.
Nice.
That's not what this workshop is about, people
What
who are
did you
watching
have
in the
for
future.
lunch?
Oh, I haven't had anything. I actually haven't had anything. I was good last night and made my porridge, like my overnight oats.
Yep.
So I had that and I had a couple of crackers. So I'm not actually really hungry. And I probably am
Yeah.
not moving very far from this desk for the rest of the day. So I'm not actually using any
Yeah.
physical energy. So I really shouldn't eat too much. Like, as in, I
Should
probably
eat
have something.
lightly.
I'm just not
Yeah.
going to get hungry today. I do have some
Yeah.
vegetables there that I need to cook up. So I may have those. Oh, did we just put our glasses on at the same time?
Oh, we did
Oh,
too.
we did. But I didn't see you do it, and you didn't see me do it because we didn't have
No.
glasses on. That's funny. Okay, all right, let's get started. Today we're talking about profit. And so I did a presentation, and so this has kind of come from because I hadn't planned to do this topic, except I came from I was on a panel at the Tropical Innovation Festival just at the end of last month. And so I was on the panel with some other speakers, and the last question is, so Lisa, with all your years of experience, tell us, what is one piece of advice you'd give to young people, young Indigenous women starting business? And I just went, learn how to read a P&L, learn how to read a profit and loss statement. And everybody laughed. That's kind of like, and we laughed and like there was no time in the presentation because they were on really hard, like tight time frames. So there's no time for questions or kind of elucidation or kind of explaining it. But for me, the older I've gotten, and I've said this a few times in different talks and things over the last year or so, but I'm putting, and I may have said this in a one business session already, so you may have heard me say this, but learning to understand profit and know how to read your profit and loss statement, know how to make a profit, know that that's actually what you need to do. So when I say profit, I don't mean buying big mansions and buying Lamborghinis and all that kind of stuff. I also don't mean profit at any cost. Doesn't matter who you burn, what damage you do, you must make a profit. I'm not talking about that. But I am talking about running your business in such a way. Oh no, I've got the hiccups. Running your business in such a way that you have something left over at the end of every year. And that profit that you make, which may only be a $2,000 profit or a $5,000 profit or a $10,000 profit, you have that money at the end of the financial year. You can then put that into a bank account and start saving up for things like, one day employing another person, buying a piece of equipment, or, going and doing an extra course to add to the skill set of your business so you can increase your offering. A profit doesn't have to always be, and I know that I have done that in my mind, people who are just profit driven, and there are companies, I'm not going to lie, and I'm not going to pretend. There are companies out there, profit is the only thing they care about, and they don't care who they hurt. But as a small business owner, if you're not making it profit, it's just going to be so much harder for you to keep your business running. And so in this last week and in this week, and again, I'll go over what I talked about last week. I'll do that. So I'm putting them together. So if you don't watch 1 and 2, if you just watch this video, you've pretty much got everything. If you don't, so what we're going to do is we're going to go through the profit and loss statement, look at the different elements of the profit and loss statement, and then so you can go, oh, this is how my company is performing or my business is performing. Now, I'm not an accountant. I don't have any financial qualifications. I did accounting in high school. It was general ledgers and all on paper. It was in last century when we went to school. I'm not an accountant. I'm not a bookkeeper. I am a business owner. So this is the perspective of the profit and loss statement from a business owner's perspective. And I've spent quite a bit of time over the last probably 5 years and have invested money in courses and programs to help me understand the profit and loss statement better. Help me to understand it. Help me to read it. Help me learn how to shape a P&L, a profit and loss statement for what I need, not for what. So you can do a profit and loss statement for taxes, for Centrelink, all of those sorts of things. That's fine. That's not necessarily going to help you make decisions. So we're looking for the P&L that's going to help you make decisions. So this is just a basic, today's session, like last week's session, we're just going to go over the basics, okay? So that everybody is at a particular, at the same kind of standard. And we all have the same information. So because for us in one business, all of our teachings about upskilling. So you have the power to make decisions. You have the power to grow your business. And when you do your P&L, and then after a while you realize, we're not making any money, then you can make decisions about, okay, this is what we're going to do about that, which might be close your business, or it might be other things. Now I'm going to try and share my window because I do have a spreadsheet that I also want to show. I do have some P&L spreadsheets, but I'm not necessarily using them in this session because that's not really what, these are just kind of, so can you see the spreadsheet, Kel? Yeah. So I'm not really sharing a specific profit and loss statement template. I can make one if people wanted one, but I'm just using this to show you some different formulas. And I do say this a bit, you do need to be across how to use a spreadsheet if you're going to be a business owner. All right, so let's get cracking. I'm just moving my screens around so I can see everything properly, and hopefully it will go okay. All right, so before we start, I want to, of course, acknowledge country. And acknowledge the unceded sovereignty of Aboriginal and Torres Strait Islander people across Queensland and Australia. I'm coming to you from the lands of the Turrbal and Yagara people here in Meanjin, the place we now call Brisbane, so-called Brisbane. And Kelly, of course, is up at Cubby Cubby country. So we acknowledge you from wherever you're coming from when you're watching this video in the future. And I also want to acknowledge TAFE Queensland and the Queensland government for their support of this program. We are now 5 years in.
Wow.
No, 5 years in? 20, 21, 22, 23, 24, 25. Yeah. Oh, six. 6-ish years. I've been, 6 years. All right.
Wow. That's awesome.
I know. And we weren't talking about profit loss statements back 6 years ago. Oh, wow. Okay. So this kind of little mini season is talking about starting the new financial year. So what we looked at in the first week, we were looking at our pipeline, looking at how to get ready for the upcoming year. So one of the first things that we did was literally I think it was either on the Friday or the Monday, I can't remember, of the last one, because the first day of the financial year was on the Tuesday. So it was either on the Friday or the Monday. I have to go back to watch the video. I actually went, okay, what jobs do we have coming up? and what are we finishing off that we may already have been paid for? Because that's what in our world, in our business, sometimes people will pay for they will pay for jobs in the last financial year that we don't have to do until this financial year. So that revenue is recorded in the last one. If you do accrual accounting, which is I have spoken about before, happy to explain that. There's two types of accounting. For accounting purposes, it's accrual versus cash accounting. Doesn't actually mean you have cash, like paper cash. You can still be a cash business even if you just do direct deposits. Happy to explain that at a different date. But so sometimes for our business, some people will pay, they need to pay before the 30th of June in the previous financial year. So that revenue was recorded in that financial year. We don't get the money straight away. We often will take like 2 or 3 weeks to get the money, the actual money in our bank account. And then we have to do the job in that next financial year. So we record the profit. Record the revenue in this previous financial year. I'm just going to stop sharing because, was I sharing? Oh, hold on. I was going to
Yeah.
stop sharing because I use my hands and then sometimes the recording doesn't show my hands, but I think the hands helped. So what happens for us is we in up until the 30th of June, so this is the financial year, 30th of June, 1st of July. So the revenue we have to invoice before the end of the financial year in this previous period. And so the revenue is recorded, as at the 27th of June or something like that. We don't get the cash. And this is this is the sort of work you got to do. We record the revenue here. So it's now a revenue in the profit and loss statement, in the P&L for this period. But then we've got all the expenses coming out here but the revenue is from there. So it's kind of, it can skew your profit and loss statement. You're like, oh, we made a lot of money there. We've got a lot of expenses here. You're like, what's going on? So you just got to really understand the patterns and shape of your business. So that's what happens for us. So what we did on that first day, this is why I was talking about this, but in that first period, I was like, what work do we have? What jobs do we have coming up every single month? So I broke down the months and the template is there that you can get a copy of and then adjust it and make it your own. So then I said, okay, so what jobs have we got coming up? How much money do we have coming up over the next 6 months? Because the other thing for our business is we have very little income in December and January, and it only starts ramping up as we go into February. So what that means is we basically have to earn enough money between March and kind of October. So March, April, May, June, July, August, September, October. So we've got 9 months to make money that has to last us 12 months because we have employees and we have other expenses. So the money goes out, but there's nothing coming in. So we've got to make sure that we're tracking and not overspending in this period where we've got, look at all this money. It's like, actually, that money's going to last us over the Christmas period. And so that's part of the work that we have to do. So that's what we did in the first week, was looking at our pipeline and going, okay, what work have we actually got coming in, so I can make sure that we have enough to last us for the period. We talked about managing your cash flow. So that's in that first session a couple of weeks ago. I have done I love a cash flow forecast versus a cash flow statement. A cash flow statement is very different, but a cash flow forecast, I've got every single week for 25, 26 along the top of the spreadsheet in that template. So you can grab a copy of that, and you can go and use that in your own business. Talking about setting goals, like actually what are some of the goals that you want to set for your business? It might be, I want to see a 5% increase in profit, or I want to see a decrease in increase in sales. I want to increase the annual sales that our business, not annual sales, average sale. So currently when a person buys from us, they spend $45. Okay, how can we get them to spend $55? Because that 10% in average sale increase will give you something else. So we're trying to think about those things. I just realized too, and I haven't done anything about it, I think Australia Post has put their postage costs up. So our t-shirt brand, I need to put the postage up because our t-shirt The postage comes out of that. I don't think we're making very much money out of that at all. I shudder to think if we actually did a profit and loss for that, probably go, oh my God, why are we doing this? But anyway, we're not selling enough t-shirts. We don't do any marketing, so it doesn't help. And then we're talking about profit, which is why we're talking about our profit and loss statement. So here are some of your goals. Again, just go back to what your goals might be for this period. I'm actually thinking about in a couple of weeks making some signs for my office here so I can go, oh, what are the signs, Kelly, I want to do for my desk? Above my desk is you being recorded because I am, am I recording this? Did I click record?
Yes.
I did.
Yes, you
Okay.
did.
I always forget because there's no button here that says I'm being I recorded it and I can never find it. I actually want to have on the wall a sign reminding me because we're recording all of our meetings at the moment. I want to
Yep.
remind myself that I'm recording this meeting because when you record the meetings and then we're using AI to do it, and yeah, everybody gets a copy of the minutes, so you just need to make sure that you're everything you say is being recorded. So that's one of the things I want to do. But anyway, off topic. But what are some of your goals for this year? Increase your average sales by X, increase the number of customers. So maybe you had in 24-25 financial period, you had 30 customers. Well, okay, let's make that 40 customers. What do you need to do to make those 40 customers? And increase average sales by 5%. Oh, I've already got that. Okay, so to understand profitability, so let's jump into it. We need to understand our profit loss statement or our P&L. Sorry, and I do abbreviate there. Think of it as a story that your business tells you every month, every quarter, or every year. It shows you where your money came from, where it went. It's terrible. You go, where did all the money go? And what was left over. So let's break down the main characters of this story. So the main characters of our story are revenue. So that's money coming in. And so sometimes the words that we use, there's a couple of words to describe it. So it might be revenue, you might call it sales, you might call it income. Same word, doesn't matter what you call it. We're calling it revenue in this version of the story. We minus the cost of goods sold. So the cost of the goods sold, if I sold one muffin, if I sell muffins, the cost of that muffin is the cost of the flour, the cost of the blueberries, cost of the milk, the cost of the eggs, or sugar. All of those things get added up, and that's the cost of the goods sold. So when you minus revenue less cost of goods sold, that will give you your gross profit. So that's at the top half of your profit and loss statement. Then after that, you then have operating expenses. So operating expenses you might also call them overheads. You might call them indirect costs. Some people call them indirect costs. So you have gross profit. Hopefully you're making a gross profit. If you're not making a gross profit, there's something's going on. Something is not working in your business. You need to make a gross profit. That is absolutely fundamental. And then your operating expenses come out of that, and that will then give you your net profit or net loss. Okay, so that's basically the structure. Now, of every profit and loss statement, and that's basically gross profit, net profit at the bottom. So top of the line, bottom of the line, gross profit, net profit. So net profit, why does it matter? Oh, so I might just flick back here. Because last week I actually looked at hold on, I'll just go back. Sorry, I've got them all on the one slide. I deliberately put them all on the one slide. So that was the same slide. And then, so this is just a recap. Oh, now warmed up, now that I've started talking. So I'll take my scarf off. Once I start talking, then I get all warmed up and ready to go. Okay, so I just wanted to go back to what we talked about last week, which was gross profit. Why does it matter? So gross profit is like the engine's power. It's the raw power your business generates before you account for the cost of keeping the car on the road, which are your overheads. A business can have high sales, but it will still fail if its gross profit is too low. This number tells you if your pricing and your direct costs are set up for success. If you have a very low, so we've got cost of goods sold. Okay, so I think it's this one. So if your sales price, actually, I might just jump over here. Can you see the spreadsheet, Kel?
Yes.
Yeah. So we're selling a bracelet. We're going to sell the bracelet for $22. This is a single bracelet. It costs us $5. The cost of the material of the beads, the strings, and the clasp is $5. That gives us a gross profit of $18. So we make every time we sell a bracelet, we make $18. So that's a nice little gross profit margin. Because of course, remember, out of that $18, we've got to now pay for the cost of the website that we built. We've got to pay for the our wages. We've got to pay for the electricity. We've got to pay for the little needles and the tools that we use to actually make the bracelet. Those things aren't necessarily included in that. And so if you aren't making a profit, a gross profit, your business model probably is not working. And so people get very excited by revenue. And I know I have been there in the past where I'm like, oh my God, oh, we've made it. It's fantastic. Everything is great. This is it. We've made it. We've done it. Yeah. That's revenue. That's not profit. Revenue is not profit. What you're looking for is profit, and what you want to make actually is a net profit. So be really careful as you're doing these calculations, that you're not only looking at one part of the picture, you're actually looking at the whole picture. All right, so I'll just go back to so there's just some ways that you can increase your profit margin. Can you increase profit margin without losing customers? Can you increase your price? So rather than just selling it for, what are we selling it for? $22? Can we sell it for 23? Because if we sell it for 23, and I'll just make this a bit bigger so you can see it. If I change this 22 to 25, so I've got some formulas in here. If I change it to 25, you can see my gross profit margin is now 82 cents. And my gross profit went from 18 cents to $18, sorry, $18 to $21. If I can charge $25.50, oh no, I'll just say 25. So if I charge $30, then I'm making it 85%. If it looks like I can't sell them, if I sell it for $15, then I'm going back down again. So I'll just show you this formula here. I'm not sure if you can see it. So these are really simple formulas that as a business owner, what you should be doing is really like, you're like, oh, how do I know how much the bead, how do I calculate this cost of goods sold here? You literally count the number of beads in every bracelet. Like that's what you do. You have to do that over a number of, like you might be making, bead bracelets, and you like, okay, so you buy the string, and then it's measured like it's 3 meters worth of string, and then you're like, well, this is how much string I need for, you say you're making a small bracelet, I need this much string, which I don't know, is 15 centimeters. So then you go, it's $10 for 3 meters. For 15 centimeters, it's how many cents is that? And you literally calculate to the nth degree exactly what how much string you're actually using, how many beads. If you're buying your beads, if it comes as like 100 beads or versus like a kilo of beads, depending on how, I don't know how beads come. Like say it's like 100 beads, and you would count how many beads you use. I use 20 beads in this small necklace, which uses 15 centimeters of string, 15 beads plus one clasp. What is that amount? So you start a spreadsheet so where you can actually start, and if you can't use a spreadsheet, do it in a booklet where you're literally calculating every single cost of your business. And so that's kind of what you want to aim for here. So there's another spreadsheet, say for instance, where we've literally calculated that it costs us $5. Now, what you would do is you would have, I'm guessing you're a jewelry maker. You're not just selling one single bracelet. You're not selling one bracelet that's identical. You're going to have the butterfly bracelet. So how much is the butterfly bracelet? So you will have all of these you'll do calculations for every single one. The butterfly bracelet, the small bracelet, the large bracelet, the medium bracelet, the gold glass bead bracelet versus the wooden bead bracelet. So you will have calculations for every single one of them. And that's your job. So that's bracelets, maybe you're a potter. I don't know. I'm kind of arts and craftsy here, but if you're a potter and you're going, well, I'm going to make a pot, you would measure and weigh how much clay you're using to make that pot. So you've got small pots, large pots, flat plates, teapots, like whatever those things are. And then, of course, whatever your business is, you're doing, you have to do those same calculations. And I think I did have here. So for product businesses, list every single direct cost that goes into one unit of your product. So jewelry maker, beads, glass, wire, packaging box. Also, if you are selling them and they come in a box, you have to count the box as well. So sometimes, when you do jewelry and they have like the little box and then there's a little piece of soft stuff in there, like a cushiony stuff, you would count that as well. For service-based businesses, identify the direct costs of delivering the service. So it might be travel to a client site, specific software subscriptions used just for that client, for any materials that you do for the workshop, that kind of thing. So they're all your cost of goods sold. All right, I'll come back to, so that's our gross profit. I'm coming. Net profit. Okay, structure of the story, net profit. So we've done the top half. Now we're looking at the bottom half, which is this part in yellow. Operating expenses. So our top half is our engine room, is the machine running. Now we've got the cost of actually running the car. So how much does it cost to run the business? So this includes everything from fuel, which might be rent and utilities, to insurance and registration, if we're keeping the car metaphor going. So professional fees, software, subscriptions, entertainment, networking event, memberships. Do you have to be a member of the, Jewelry Makers Association or a Chamber of Commerce? If you have insurance that you need to pay. If you've got market stall fees, anything like that, all of those things go into your overhead. So the net profit, so you take those things off, all of those operating expenses, and that gives you your net profit, which is the money you have left over in your pocket after everything is done. The other thing to mention that a profit loss statement is for the period. So when you do a balance sheet is as at a point in time. So when you see, it's like balance sheet of XYZ company as at the 30th of June, 2025. A profit loss statement is your profit loss for a period. So during this period, so always is my business, profit loss statement, my company name for the period 1st of June to the 30th of June, that kind of thing. So it's always what you've done in that period. So this is why net profit matters, because it has to cover all of those things. And now, so for instance, if you've got wages, for example, and you're paying yourself, you have to make enough profit at the top to pay yourself a wage. So you actually have to have enough revenue coming in, less cost of goods sold, which will give you a gross profit. So you've got to have a pretty healthy margin. And then somewhere along the line, you've got your website, you've got all your marketing expenses, you might do some Facebook ads, and then somewhere in there, you've also got to pay yourself. So the question to ask yourself is, are you capturing all of your operating expenses? So here are just some ways of thinking about it. So where you're running your business, so it might be rent, utilities, insurance, the people in your business, so wages, superannuation, training costs, promotion, so marketing, advertising, website hosting, processes, like things like accounting software, like Xero or MyOb, phone, internet, bank fees, and office supplies. You need to distinguish between fixed costs, so that's rent, which stays the rent, for example, which is pretty much the same, and variable costs. So if you have a big marketing campaign, obviously your marketing expense is going to go up, and they might be up in 1 month and then down in 1 month. Those things can change. It can be, it can be different like that. So you want to, if you're going to try to reduce your overheads, so one of the things that we've been doing for the last year, it's really easy. And I guess the thing is, don't, it can be really easy when you're really busy to just sign up for stuff and not really, and then forget to not sign up. I was saying to the team this morning in the meeting, it's like, oh yeah, we were paying for email addresses for people who haven't worked in the company for 3 years. It's like, oh no. So all that money is just gone. It's just gone. There's nothing you can do. You can't get it back. So it's just stuff like that. It's really easy to have expenses, be paying for stuff that you actually don't need. And so setting aside some time, which is not easy and it takes longer than you think it will take, because you've actually got to go, what is that? What's that? $20 coming out. $20 doesn't seem like a lot, but it might be just, $20 a month or $20 a year. It's like, yeah, but over a period of time, like that could have been something. Like it's not necessarily going to keep your business, destroy your business. That's your money. Like, don't pay it if you don't have to. And that's just where we're up to at the moment, going through and getting rid of a bunch of stuff. And that's Kelly. And that happened yesterday when I accidentally cancelled the one business resource phone line because I was like, what's this phone number? Why are we paying this money? And I cancelled it.
Oh.
It's just like, oh my God, I can't believe I did that. So be really careful when you do that because sometimes you do silly things like me. And now I'm trying to got to get it back again. Anyway, so for each expense, place it in one of the columns. Like, I guess, when you've got a declutter, if you're a fan of decluttering videos on TikTok like me, they always have like the keep pile. They've got the donate pile and they've got the, was it keep, donate, and then probably throw out pile or something.
Recycle or something.
Recycle pile or whatever. So you can do the same thing with your expenses. You can keep them because they're essential. You can cut them. It's an expense that you can confidently eliminate without harming your business. Yeah, because one thing we just did today, so we're using ChatGPT, and we don't use it a whole lot, but I did have a professional account, which I think is I think it's like $300 a year or something. But in our Google Workspace, we actually get Gemini. So it's like, oh, well, why are we paying for two AI tools? It's like we only need one. So we cancelled that today. So that's just an example of that. It's like, oh, we could have just kept it going, but it's like, why are we going to pay for that? We can just use this one. Anyway. And then question. So keep cut question. An expense that you need to investigate. Can you get a better deal? Is it still providing value? Which reminds me, I just was going to look at my car insurance. I need to look at my car insurance because they're going to charge me a lot of money. And I was like, oh, I need to question this. But now I think I'm probably not even insured. So I will jump into that one. Can you get a better deal? Is it still providing value? Am I getting a return on my Facebook ads? Can you find a cheaper phone plan? There are lots of different options there. So reducing your overheads is going to reduce your is going to increase your profit. So I think I have a spreadsheet here. So here's my one business profit. Okay, I'll just make this a bit smaller. Okay, so here's our net profit. We've sold $200 worth of it's my little example. $200 worth of bracelets, which cost me $50. So what did I hope? I was selling them for $20, wasn't I? Oh no, sold it for $20. That's right. Is that right? $20, yeah. So I was selling it for 20. So I've sold 10 bracelets, 10 times 5, which is cost of goods sold is 50, which means my gross profit is $150. I paid $50 for the market stall, $10 for petrol. My lunch and my coffee was $20. I bought a new sign, but I'm going to be able to use that new sign like multiple times. So I won't probably have that expense the next month when I do a market stall. So that's okay. So that's why I decided to get it, which means my total operating expense is $100 and my net profit is $50. So that's not too bad. So if we just put in here, we went to the markets in July, August, September. So let's say we do exactly the same thing. So I'm just going to copy and paste these. But remember, we already bought the new sign. So my net profit next month is going to be $70. So this month it was 50. Next month it's going to be 70 because I already have a sign. I don't need to buy that again. So I'm going to take that out of there. Again, it's 70. Now I realize actually I could take my own lunch and coffee. So that's 0. And I'm going to make that 0. So now my net profit is now $90. That kind of thing. And maybe I will I'll make another sale. I'm going to increase my sales. So now it's 140. So by reviewing your sales and your costs, you're starting. Now, obviously, this is a profit and loss statement for a market stall. And it's just mocking it up. But what we're not including on here is my phone plan. So if I've got my phone plan, regardless of how many stalls I do, my phone plan is still, I don't know, $50 a month. So I've still got $50, like $50 a month for my phone plan. I'm just going to increase this. Oh, what's that? Oh no, this one here. Some. I'm just going to do that. There we go. Oh, I didn't make any profit now because I've got my phone plan. And then my website, etc., etc. So suddenly this is the work that you've got to do. So we need to increase our sales and we need to attempt to decrease our overheads at the same time. So that's the example that I was just using before. So gross profit, less overheads, gives us our net profit, and our net profit margin is net profit divided by revenue times 100. So what's your margin? So one of the activities that you can do in your business is have a look and see what your net profit margins are, your gross profit margins, and then your net profit margins. What does the result say? What does it mean? I have been reading 10% net profit is very normal. 10% net profit is actually quite normal for a small business. So if you get to 10%, you're probably succeeding. What you've got to make sure you're doing is keeping that money in the bank and not spending it.
Does that include paying yourself?
Yeah, yeah.
Yeah.
Well, that would be you would only pay yourself if you're yes, it should
If your gross
be.
profit's high enough.
Yeah, you got to make sure your
Yeah.
gross profit's high enough. Yeah.
Yep.
Now, I did mention this in the last week's episode, and I'll say it again, and I'll refer people to Tracy Sellers. So Tracy Sellers has done some training for us. She's from Ironbuck Industries Accounting. She's based at Logan here, and she's a profit first person. It's profit first or it's bottom up profit. What do you call it? I can't remember. Profit up. I don't know. Bottom up profit. I forget what they call it. But basically, I'll go back to this one. What happens for some of us? Here we go. Oh, that's a little mock-up of a P&L. It's basically its structure. But for most of us, me included, for many years, this number here, or make it yellow. Here we go. This number here, the profit, is like, I'll try and sell as much as I can. Try not to spend too much money. Let's see what net profit we get. Oh, wow. And so at the end of the period, you're like, oh, what did we get? What did we get? What did we get? And it's like a surprise, or it's like the lotto, or it's devastation. It's devastation. So you don't know what kind of profit you're going to get because you don't know how much you're going to sell and you don't know what your overheads are. But a profit first model, so I'll just put this here. And I'm not going to try to talk too much about it because it's a whole qualification and I'm not an expert in it. But a profit first model says I want to make $5,000 in profit. So it's like instead of this minus this, so I'll just do this. So it's that minus that equals that. So instead of this minus this equals that, what you do is you go, this is what I want to earn. If I want to make $5,000 and my operating expenses are $150, I need to change that. Let's say I want to make $150 profit. So profit, that's what my equals is. That means my overheads must be this. This means my sales must be this. So it's kind of like, remember when you were in school and you did like algebra and stuff? It's like A equals B plus C or whatever it is, or X plus Y. I can't remember, but it's like what we've actually got to do is we've got to turn it around and say, this is how much I want to make. So it's like, so this one equals, so if I go, I think this would work. So this equals, equals sales minus overheads. So I'm actually doing it backwards. So I need to sell $400. Oh, no, I don't need to sell $400. I just want to make 150, 350. I just need to sell 300. That will give me my target. I want my target to be 150. So that's going to be my target is 150. So it's actually turning the calculation. That's a very messy and awkward way of explaining it. But that's kind of what the profit first model is where you go, I'm going to make 150, which means I need to keep my overheads at 150. I need to make sales of 300. So that's what you're constantly pushing for. And they put aside their profit. And you do this, and this is a bit tricky because this is a market stall, but it's like, so some of the things that we're trying to do in our business is actually go from every transaction. So every time we close a job, we individually calculate the profit should be X. And then we're taking that money out of the bank and putting it into a separate bank account called profit bank account. Now, hopefully, not hopefully, the goal is that we'll keep our overheads in check so that we will actually be able to retain that profit. And by retaining that profit, it means we can increase, like for me, the goal is that we can put on extra staff. I can't put on extra staff until I have enough money in the bank so that I could carry that wage for 6 months until that extra staff member starts generating revenue. It's that kind of thing. There's no Lamborghinis here. There's no fancy cars. No fancy cars here at all. We're not looking to buy stuff. Well, that's our business. You might be a single truck business and you operate a business where you've got one truck going and one tradie, and you're like, well, if we have some profit, I can go and buy another truck and increase, work on the south side and the north side, that kind of thing. So increasing your profit margin. Can you increase your price without losing customers? Same question as before. Can you find cheaper suppliers for your materials without damaging the quality? Can you reduce waste in your production process? Like, can you make things faster? There's an example here. So this is an example from another workshop that I delivered. I just left them in here. It was a mock program that we ran during Queensland Small Business Month. It wasn't a one business project. But what we did was we actually calculated how much is each product or service we offer cost the business. So we've got coffee beans plus the milk plus the lid, 20 cents, gives us 98 cents. It takes 2 minutes. I was guessing. I've never made a coffee really like that before. But I'm saying it's 2 minutes to make the coffee. 2 minutes in labor was actually our calculations that we did was $1.09. So it actually costs $2.07 to make that cup of coffee. If you're running a coffee van, you should be at that point where you know that it literally costs $2.07 to make your cup of coffee. Doesn't have to be $2.07, but you have to know whatever your version of that is. You need to know that level of detail. How long does it take me to, you need to time yourself regularly throughout the day with a timer and a stopwatch proper, like get someone to time you, so that you can calculate this is how long it takes, because you're going to make decisions about whether I can afford another staff member. And then you would be documenting also, if you had a cafe, you would be saying, well, between the hours of 9 and 10, we're really busy. Okay, so you need to get a staff member in then. The hours between 1 and 2 p.m., it's dead as a doornail. Like no one's coming in. You don't want to be paying staff for that period of time when there's no customers coming. So tracking all of those patterns and rhythms is really important. And so we calculated here that it was actually $4.63 because they were selling their coffees for $6.70. But getting to the point where you're actually timing yourself. And the thing about the bracelets, because we have a lot of businesses in one business that start out as hobbies, which is great. And you should be, but you should, if you can, time how long it takes you to make that bracelet. Because if you want to keep the business going, but you want to go on holidays and someone else has to make that for you, you have to pay them. You have to pay them award wages. You have to pay them superannuation. You've now got workers' compensation costs on top of that. So it's like you need to charge the price, and not everybody has this goal, but in an ideal world, can you charge the price that you would need to charge if you had paid staff? Because there's a good chance you're probably not paying yourself, but if you're going to pay someone else, you've got to make sure that you're actually charging the right amount. And most of us, for many years, and myself included, have not done that, which is why at the age of 56, I don't have as much super as I should have, which is a chronic problem for small business owners. We don't put superannuation aside for us because we don't have to. We have to do that for our staff. We don't have to do it for ourselves, which means a lot of us don't have superannuation. So it's really, really important to small business owners that we do that. So can you, and you don't probably think about it in your 30s, but when you get to your 50s, you're like, oh, damn, I should have done that. Can you reduce your overheads as well? So that will increase your profit margin. So why is net profit margin important? It means that for every single dollar your business earned, after all the dust has settled, after every single bill has been paid, you got to keep 25 cents. That's what you got to keep. That is your profit margin. So that's the stuff that you need to keep. And that 25 cents goes into the kitty for whatever you want to put it into. They typically say that there are three things that you do with profit. One is you put it back into the company. The second thing is you pay off your business debts. And the third thing is you take it out of the company and give it to yourself. And you then pay tax on it because it's your income. Why is net profit margin important? Also, it tells you if your business model works. A high gross profit margin is great, but if your rent and marketing costs are huge, you might still end up with no money. The net profit margin will reveal this. It also helps you make big decisions. Can you afford to hire help? Can you afford to move into a shop with higher rent and maybe at a better location? Looking at your net profit margin helps you to answer these questions. It also shows you where to improve. So if your net profit margin is low, you either need to sell more, increase your gross profit by raising prices and lowering material costs, or cut your operating expenses. Find a cheaper market to do and pack your own lunch. Why is net profit margin important? Well, gross profit margin tells you if your pricing is right. Net profit margin tells you if your business is right. You need to know both, but the net profit margin is the one that tells you what your business actually gets to keep. A healthy business will generally have a net profit margin of 10% or more, but this varies a lot between industries. Oh, that's it. That's it.
Very good.
I hope so. Just such a tricky one. Like I think
Mm.
a lot of the businesses that we meet, and I know I was in this place. I think that I think particularly if you're coming to business from a place of passion and you want to do something good in the world, it's really easy to not worry about making a profit. Um, it's really easy to sacrifice profit for this greater good, but that just means that your business is probably unsustainable. And at some point, you've got to make some hard decisions because you can only exist on fresh air and love for so long
Yep.
before suddenly the taxes are due or you need to do something else or you get hurt or injured. If you get hurt and injured and you're not charging rates that allow you to get someone else in, I think I may have shared this, but did have a conversation with someone who was doing a quote for another business and they run workshops. So really, when you do workshops, the sort of work that we do, our biggest expenses are subcontractors. And like we don't have a lot of cost of goods sold. I mean, some photocopying and printing and things, but I'm not buying a big machine. So the cost of goods sold, I'm not buying flour and milk and all that sort of stuff. And because we sell our time, like there's 38 hours in a working week generally. I sell my hours. Where how many places I could be, that's what I sell. But anyway, I was talking to someone who was doing a quote and we were chatting about it, and she's like, "Oh, so what happens if we get sick?" It's like, yeah, what happens if you get sick? So she was charging, let's say, for example, so um, uh, she was charging like $2,000 for 1 day workshop, and there was two people, and there was a flight involved. It's like maybe it was $2,500, and accommodation and a flight, and two people, and probably materials and preparation time. So $2,000 a day feels really good. But actually, and then she's like, but what happens if I get sick? Because if you don't charge enough, if you get sick and have to pay someone else, you're probably not just you're losing that money for yourself because, and that's what you're using to pay your bills, you're probably going to go backwards and actually not make a profit at all on that whole job.
Yeah.
And you're also going to be struggling because you're not going to have that income because you've got to give what you were banking on your income to go to someone else. Whereas now, of course, there's income protection insurance and those kinds of things. Touch wood, I've never had it, just touching all the wood around me. I've never had income protection insurance, but it's the kind of thing, well, one, you would have income protection insurance if you did get sick and were unable to do it, or you would have a bit of a kitty in the bank. That but that kitty in the bank comes from previous months where you've made a profit and not spent that money. And so this is really hard. Like I have never been great with this stuff, and I've always sacrificed profit for I'll make profit one day. I just am not going to
Yep.
think about it too much now, which is why it can be really tricky. So yeah.
Yeah. I wish that I had somebody explain this stuff to me when I first started my business because I would
Yeah.
have done things very differently.
Yeah.
Like I put people on right from the very start. It was a retail
Oh,
shop. I
yeah.
put people on only for like very limited hours,
Yeah.
but just so that I didn't have to work 6 days a week by myself. And yeah, it I I didn't pay myself anything.
Do you know what?
I was doing it for love.
Can you remember what your rent was?
500 a month, I think it was.
Oh, wow. Oh my
Yeah, it was
God.
only a very small shop.
Yeah.
Yeah,
Um, yeah, it'd be interesting to go back and have a look at it.
yeah. I probably got the records somewhere, but yeah,
That was a while ago now.
yeah, it was.
Yeah. No, and it's so hard. Like you were driven by a passion to have something and try something and you loved the
Yeah,
stuff that you were selling and so that was what drove you and that excitement and that energy, was just driving you to do that. And
yeah,
I feel like it's really easy to kind of go, oh, when I've done this, then I'll make a profit. When I do this, then I'll work out how to make a profit. Whereas if we can come from, okay, how am I going to do this from the very outset? Yeah,
yeah.
it's really tricky. But yeah.
If I'd had a bit more information, like I did do a small business course before I started, but yeah, it didn't go into depth with things like this, which I think are really important.
Well, I've done small business courses before for years,
Yeah,
but it's what you're ready to, it's like what you're
yeah,
open to hearing. Like
yep,
I'm open to hearing this because I'm 56
yep,
and I'm like, oh crap. But at
yep.
30, at 20, what was it, 25 when 24, 25 when I first started, I was like, nah, we're gonna change the world. Someone probably told me, Lisa, you're not making any profit. I was like, she'll be right.
It'll
Profits,
be okay.
she'll be okay. We'll work it out. Plenty of time. Yeah.
Yeah,
Yeah. And so,
but
I mean, so if you are watching this video in the future, I'm sharing these because I know, you may not be this person, but lots of us are. And
yep,
it's not too late. It's not too late to get yourself out of it. And some of it was also habits as well. I know I've learned very strongly that taking money out of your business for personal things, not having a personal budget, that really impacts on your business as well. Keeping
yep,
all those personal expenses under control. And I'm still learning how to do that. Still plugging away at being better at that kind of thing than I have been in the past.
yeah.
So yeah, yeah, interesting. But next week, hopefully, it's the 15th. So next week, hopefully, we're going to start our series. I haven't even started writing it. I have bits and pieces of work that we've done over the years, working with governments and corporates. We've done that. We do that once a year kind of thing. But I'm going to put it together in a single block of training. And then by that time, we'll be coming up to preparing for Christmas. So
Oh,
if
scary.
I know, I can't believe we're here already. I feel like we just did it.
Yeah,
But
haven't
that
quite
all,
recovered yet.
no, no, I know. Well, yes, I know. It's not that far away. Not that far
No.
away. not that far away at all. So then we kind of get into the preparing for Christmas content. But we do have a lot of stuff from previous years that we can revisit as well. So thanks very much.
Okay.
It's almost 1 o'clock. It's an hour.
Wow, they all went fast.
That did. Well, I kind of did two in one there, really, a little bit.
Yeah.
But yes, the key message is, folks, learn about profit and loss statements. It doesn't have to be
Yeah.
scary. Well, it can scare you. I always have this dread when I'm seeing my accountant, but I try not to, but I do a little bit.
It's
I do
like going to the principal's office, isn't it?
it is a little bit.
Oh, well.
Awesome. Talk to you soon.
Okay. Yep.
See you.
See you
Bye.
later.